I'm Gord Birch. I am the incoming inaugural Kelly Questrom Associate Professor in Management. I'll be joining Questrom in July of 2021. My research background is in the area of social media and crowdfunding, crowd finance.
Yes, my name is Mark Williams. I've been on the faculty for almost 20 years at Boston University, and I specialize in risk management in the capital markets. Prior to joining Boston University, I worked on a commodity trading floor here in Boston and also at the Federal Reserve in San Francisco and in Boston as well.
Broadly speaking, we have a bunch of hedge funds that were largely making a lot of their money by taking short positions on certain businesses. Most notable GameStop, but some other ones have been picked out more recently. Which essentially means they're borrowing stock and essentially selling it with the plan of buying it back later when it crashes and returning and keeping the difference. And a number of people, at least in the narrative we've been hearing in the media, a number of people on Reddit and other social media platforms sort of banded together. And because they had good memories in their childhood of GameStop, or they don't like the activities of large institutional investors, to try and implement what's called a short squeeze, where they started trying to drive up the price of the stock to basically put these hedge funds into a bad position, where they were taking, possibly infinite losses, where some of them started to go bust eventually. Now, there's a question as to whether the crowd on Reddit really was the main driver of everything that happens. I think we're not going to know for some time who all was involved and what the total dynamics were among the players. I think the crowd played some role here, but there's sort of a confluence of events that took place. Somebody with some digital experience essentially joined the board at GameStop and had some plans for a digital strategy that brought the price up of the stock initially a bit. At some point, we have Elon Musk tweeting saying, things should be happening that are starting to happen here. Everybody pay attention. A lot of different things could sort of happen that started to drive attention online towards this before sort of the herd behavior kicked in. And there's also some stuff that's been going on in the background that we don't really know about yet, in terms of other institutional investors maybe making a lot of money off this, like BlackRock. So that's my current understanding of what's going on.
Yeah, I think to add to that, it's quite interesting because what we're seeing here is battle lines being drawn between Wall Street and previously viewed sophisticated investors and Main Street investors, which previously haven't really had either the transparency or the amount of market power that Wall Street has traditionally had. And now there's been a potential shift, at least with the development and use of a platform, a social media platform like Reddit, for a different purpose, and that is to really create a virtual investment club, a club that could meet, decide exactly which asset class they would like to invest in, and then millions of dollars flowing in, and actually millions of investors flowing in at low cost to actually help prop up those prices. So it's really a changing dynamic on Wall Street, and I don't see this personally as a one-off event, but really a dynamic change and possibly a more democratic process being developed as investors make decisions across the United States. When we think about what happened in particular, the shorts on Wall Street had actually brought the stocks almost to the point of 140% of the outstanding shares. So what that means is that the shorts were much greater than the longs. That was an incredibly unusual position. Where we see the market now with the results of Reddit and Reddit's encouragement of getting more investors, we see a short position now that's down to about 43% of outstanding shares. So I think in essence, by having more information and broader investors in the market taking long, that is buy positions and short positions, I think it makes the market more efficient. And I think that's what we've seen the last couple of weeks, the market becoming much more efficient. The price of this stock in particular, if we looked at GameStop, its low in January at the start of this year was only $19. And as of last week, it had gone as high as over $480 a share. Now today, it dropped by about 50% and settling in around $110 a share. So I think what's happening here, shorts tend to buy, that is, set their position when they think that something's going to drop. They borrow shares to ultimately buy it back when they think that the shares will be purchased at a lower price. When you're going long, and that's the Reddit crowd, you think that you're buying low and you'll be able to sell at a higher price. So I think these two forces are really what make the markets work. And I think now the market's working better than where it did last week. So, Gordon, what do you think about that assessment?
I think what you're saying makes sense, that you need to, like, these fundamental actions in the market are essentially striking some balance, which implies efficiency in the marketplace. In terms of whether we might expect that shorts are likely to become less common or institutional investors are less likely to engage in shorting in the future, I think it's hard to know at the moment. It's really going to depend a lot on what comes out of, say, the SEC investigation. It is technically illegal to engage in open market manipulation, but prosecuting that can be quite difficult. So it's not clear if that's what's going to happen here, because usually you need to be able to identify people, first of all, if you're going to prosecute them. And there's a big question of anonymity in this context, and even figuring out who's playing a role. Not all of the influencers, some of them are pretty out there and on the news today about how much money they made, but not everybody's identifiable.
Right.
You need to be able to prove intent, and that's a hard thing to do, especially when you're talking about somebody telling their other community members on Reddit, let's all get in on this. We can't let them do this to GameStop. We love GameStop. It's not clear that there's like a manipulative intent there, so much as like, everyone that believes what I believe, get in on this right now because we need to compete and push back. Yeah. It's narrative, right? So I think the downstream consequences for short behavior it's not something that I think I'd be able to forecast at the moment. It's going to really depend. Like with anything that happens in terms of things going viral online, which is kind of how I see this event, actually, it's always hard to predict when virality is going to happen. That's one of the most difficult things, is predicting a blockbuster. Part of the reason it's so difficult to predict what's going to go viral is that it's complicated, right? There's a lot of different pieces that fit together that drive this dynamic process that plays out. And I think the same thing is true here. There's a lot of different pieces to this puzzle that sort of resulted or drove what resulted. First of all, you have the pandemic, to be totally honest, right? And why is that relevant? You have tons and tons of people that are sitting at home with not much to do. And normally they'd be going out and spending some money, especially if you're talking about young retail investors on Robinhood. They might be going out to the bar and stuff like that. And they're not doing that anymore. They're sitting at home and they have extra capital. And what are they doing with it? Well, they're day trading, right? That's an important piece of this puzzle that I think kind of created the context that made it possible for this to play out. You need to have, as you described them, maybe some rubes sitting around ready to be influenced, first of all. The second thing is that you did have like the social identity issues at play that come with this community on Reddit, where maybe a bunch of them are like millennials with good memories of GameStop. And like, it's sort of a gaming culture on Reddit is a really big thing as well. And so like, actually, I would even say we've seen evidence of this in other contexts related to crowd finance, namely crowdfunding, where you get groups of investors on Reddit that decide to come and collectively fund a crowdfunding campaign for like a board game or something because they think it's a good thing as a community and they want to see it collectively happen. So I think having that collective group and this sort of identity, social identity component that's tied to the business in question was also a big piece of this. You also had to have these initial events that triggered attention, right? So the guy from Chewy joining the board and presenting a possible digital strategy for GameStop going forward, that provided some initial upward movement in the stock and gave some hope to people to suggest the shorts might be wrong. So I think all of these pieces had to be in play for this to happen, which is part of why I'm not so clear on what's going to happen going forward. It might have been that this is like the watershed moment and now everybody realizes what they can possibly do with these tools. In terms of how sophisticated I think the people involved potentially were, I don't think that they started out thinking that this was what was going to happen. I think it evolved sort of dynamically as they realized that as the ball got rolling, and they realized they were having some influence. I think the initial objective was maybe to squeeze the short sellers a bit, but I could be a bit wrong about that. That might have been like a narrative that emerged over the course of time as they realized that the community was getting in. Right? So I don't think everyone that participated here was like malicious, at least at the outset. But that's not to say that people didn't get involved and start to take advantage of the situation once they started seeing it roll out.
And I think that it became very clear early on that basically there were three potential motivating factors that influenced really the investors from Reddit. The first one was clearly the idea that if you squeeze the shorts, you're actually leveling the playing field. In essence, the Wall Streeters have been making profit for too long and not really allowing Main Street to be involved or enjoy any profits at all. So this was a way of leveling the field. So I agree with that one trend in the motivation of the squeeze. But the second was, I think there's a pure motivation of profit. I think as the stock price increased, in particular, last week alone, it increased by 400%. From the bottom in January to the peak, as I mentioned, just 2 weeks ago, a week and a half, it was over 400. To me, that represents a lot of profit. And then we had a third group of folks that jumped in later on, and that was the fear of missing out. So obviously they jumped in, and that helped provide more capital and more buzz. And many would argue that Reddit has been a very good platform to create pump, meaning developing a story, and then potentially even creating what the SEC gets concerned about, and that's the dump. So, today we saw, and yesterday we saw a 30+% drop, and today over 50% in GameStop. So I think, it is too early to decide whether this is a revolution or not, or really for us to truly understand all the motivating factors that influence this price run up, and then also the recent drop in the price. But I think what we do understand is that social media platforms and open boards with transparency in the marketplace do help provide dissemination of better information or information in general, which allow more investors to get into the game. There's no question Robinhood, even the name implies, Robin Hood, stealing from the rich and giving to the poor. It was a platform set up with low to no fees. You could get on as an investor. Many of my students are users of Robinhood. At $20 is a minimum investment. And it's really opened up the opportunity for more and more investors to get into the marketplace. So I think when Robinhood was first started, and other apps in particular trading apps that looked at getting this population in, it was a new target market in particular, that it provided a lot of benefit in the marketplace. The concern I have, of course, about Robinhood now that it's been profitable, it's built itself on the back of its idea of being sort of democratic. It seems that it's taking on a lot of Wall Street tendencies, in particular for it to restrict trading flow like that. Brought up the concern not only in Washington with regulators, but it brought up a very large concern about were they actually impacting the price flow, and that's where the SEC will get involved and explore further. So I think they tarnished their brand in part by their decision this week, and I think Robinhood wants to do an IPO, and I think they need to actually rebuild their brand if they're going to be successful in doing that anytime soon.
Yeah, I think it's notable. I think Robinhood's one of a few alternatives now that operate on this same model where there's essentially no commission trades, and they're targeted towards, I think, younger population that they're trying to get them into investing. And I think there's probably been a bit of an exodus from Robinhood to some alternatives like Webull, but I think there's aspects of the design of the application itself that reflect their business model and who their target population is. Like if you use Robinhood, and honestly, I'm a user for some of my side trades, they designed the app to be very gamified. It's very much focused on like a very clean, nice interface for giving you sort of visually appealing, constant notifications about when your stocks are going up and down, which honestly is probably not a desirable thing for an inexperienced investor because it's quite likely to trigger, when I make a loss, I get out. When I make a gain, I get in, which is the opposite of what you're supposed to be doing. So, I think all of these things are probably playing into some of it a little bit in terms of attracting a new population of investors who might be more or less social media savvy and engaged on social media. And like all of these things are kind of tying together. Social media is well known for driving herd mentality, right? So if you think about a nice analog for what we're talking about right now, something that's been going on and playing out for quite some time is this idea of what's going on in the news, right? And that's the context where we think about social media as democratizing for information in journalism, because anybody can communicate a story on social media, and it's no longer this professional class of journalists that are acting as gatekeeper, et cetera. But the flip side of that story, and it applies here too, I think, is, we have this professional class of brokers and things. And I used to have to work through my broker to make a trade, and now I do it myself. In the context of journalism, we have journalistic ethics, and there's certain standards and norms, and there's like an honor system that journalists adhere to about fact checking and things like that. And we're starting to move away from that with social media, where everybody can be a journalist. And unfortunately, we get these dynamics that are bad because people realize that if, my goal is not just to be a good journalist, my goal is to get eyeballs a lot of the time. And people realize that they can do that by maybe telling mistruths or propagating stories that are more interesting, which, by the way, are more likely to be the ones that are not true. And something similar can happen here, where I have my identity wrapped up in my social community online, like Wall Street Bets maybe, and I realize that the more I can drive a bow wave, the more status I get in the community. And my incentive might stop being about giving you the best recommendation for making profit. It might turn into, how do I get you to do what I'd like you to do? How do I create the best reputation and get attention? And this creates a disconnect between what's actually true. And again, remember, the stock market is at the end of the day, it's about information transmission and like true value of stocks. If people stop trading on the true value and the fundamentals of a stock and start trading on something else, like their identity or on breaking hedge funds, you get this disconnect and things can break down pretty fast. And we haven't figured out how to deal with that issue in the context of news. And I don't think we're going to figure out how to deal with it in the context of trading and finance either anytime soon. This is like a really fundamental problem we're now facing.
Yeah, and Gordon, I think you have an excellent point here. And what's so fascinating about what happened in this trade, if you think about the stock, this is not a stock of a startup. When we think about GameStop itself, it was in a bricks and mortar business which was dying even before COVID came in. There was cash flows were negative. It was viewed as a dog, to the point where people were questioning when the funeral would happen for the stock. So in essence, typically you buy stocks when you have earnings, in the net present value of the stock value today is, of course, the value of expected future earnings going up. And that wasn't the case here. So I think it speaks in part to what Gordon was saying, and that is there could have been, and actually a good chance of hype, maybe pump that was created in this environment to move the stock up. And in long term, that isn't a good investment strategy to have. In a sense, I don't know any investors that are disappointed that they bought Apple 5 years ago or even 2 years ago. They bought a company that had value and they held on to it. So I think, in essence, one of the challenges for younger investors going forward, I think, with Robinhood's environment set up the way it is that young investors now get a sense that they could make anywhere between 100%, 200, 300% in a very short period of time, where traditionally to take risk in the stock market, you should only expect, the average return in the last 50 years on an annual basis is about 11% in stocks. So I think this is a group of investors which have been teased by extraordinary returns. It's not unusual for investors in Robinhood to also be investors in cryptocurrency. Matter of fact, Robinhood even allows for cryptocurrency investments. And we can just look to Bitcoin, Ethereum, some of the other cryptocurrencies and see 1,000% returns in this past year. So this is really remarkable returns. And sometimes I think as investors, when something you buy goes up, you tend to think it's a reflection of your genius, and maybe you don't give enough credit to luck.
I think long-term policy, right? I think like the SEC has a really strong interest in not having this happen anymore. So it's generally true that maybe this is balancing the playing field between the retail investor and the big institutional investors, et cetera. But as soon as we get away from people trading on the fundamentals of a stock, we get into a world where you no longer can have any faith in what's going to happen. You don't have faith in, if I make good financial decisions, I will see a profit. You get into a world where now I'm not forecasting the growth of a company, I'm forecasting what everybody else is going to think in the next week, right? And that's much harder to do, and it's much higher variance, and I'm less likely to make a return in that world. And now people begin to disengage from the market. And if I don't have people engaging in the market, then we lose liquidity, we have frictions in the market, it stops being a good representation of true valuation of a company, and a lot of things just start to break down, right? So if you want to keep financial markets healthy, I think that, regulators and policymakers or the intermediaries, right? They need to figure out a way to manage this. And it's not just delisting tickers, because that's not going to fly in the long run. It's got to be something more systematic. And I don't have an answer for that, but that's something that they need to struggle with and figure out.
And I think the SEC in particular, they don't care if investors make or lose money. What they care about, did they base their decision making on timely, accurate, and transparent information? So through their investigation, it becomes evident that Reddit, in a sense, posts created an environment of less accurate information. Then there's going to be basically controls and regulation put around social media sort of platforms that try to create these investment pools. I mean, in essence, it gets back to the point I tried to raise earlier, and that is that pump and dump schemes on Wall Street are illegal if it's viewed that this is really what these social platforms are trying to do. Then it'll be illegal on Main Street eventually as well.
Yeah, and it's also important to remember the flip side of the pump and dump is the short and distort. So you may have this question about to what extent is this going on. I think a hard thing to prove a lot of the time is intent. So I don't know how successful they're going to be in trying to prosecute this. It may be that they try. I think they kind of have to at this point, around given the narrative that's going on. But yeah, we'll see. I'll be really curious to see what happens.
Right. I think what happened this past week, when you think about how the price was pushed up from, as you're right, the distortion on the downside potentially at 19, but the distortion on the upside at over 480. So what is the true market price? We know it's somewhere between the two.
Yeah.
Where it's going to be will be an interesting discussion for you and I to have the next time that we get together.
I look forward to it. Yeah.